Hey, hello investors and future investors. Welcome to the channel. For today's video, I'm going to be showing you three stocks that have gone ahead and moved up on my watch list. I'm going to be giving you a walkthrough to show you what I see in these stocks and showcase the potential that they have if I were to decide to go ahead and trade these stocks or rather invest in these stocks. Now, if you guys are new to options trading or you're trying to make some extra income to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you three stocks that I think is very important in order for me to go ahead and grow my portfolio exponentially over the next couple of months. I'm going to be giving you a step-by-step walkthrough of these stocks and show you the value that I believe that they have that's going to help my portfolio. Now, in between each of these stocks, I'm going to go ahead and give you some additional information that should be able to help out with your options trading. Now, you guys know how we do on this channel. We like to go ahead and get down and dirty with options. Now, before we continue, I want to let you guys know on this channel, what we focus on is helping you get better at option strategies that are able to give you consistent income, not overnight, but over time. I like to showcase these strategies to show you the ease at which these strategies are to be done. And if you choose to, maybe you could go ahead and start practicing with your portfolio. These strategies are not strategies that's going to have you glued to the computer or glued to your phone. It's pretty much set it and then you forget it. No matter how the option strategies go, you're going to end up winning. So, that being said, let's go ahead. The first stock that's moved up on my watch list is going to be none other than Novo Nordisk, and that ticker is NVO. Now, let me go ahead and show you how this stock is doing so far. Novo Nordisk is one of those stocks in the healthcare sector. Now, if we go down here, we could see the 52-week low for this stock is $45. Now, the current price of the stock is at $57. So 45 is pretty close to your $57. The 52-week high for this stock is $140. So right away, with this first metric, you could see that this stock showcases it has way more upside than it does downside. Now, an added bonus if you decide to go ahead and invest in this stock is going to be a dividend. It pays a pretty good dividend. Now, I do hold dividend stocks in my portfolio. I hold 10 stocks only. And the good thing about dividends is that you don't have to do pretty much nothing with it. You get the dividend stocks, you just leave it alone, and it just keeps paying you over time. The option strategies that I practice, at least every Monday or Tuesday, I have to go and invest at least 15 minutes. With the dividend stocks, you don't have to invest anything. So maybe that's something you guys want to look into. Now, let's go ahead and check out some more information on Novo Nordisk. Now, according to the analysts are up and down with this stock. As you can see, half of them are saying buy, half of them are saying hold, and just a slim majority, whatever is left over, is saying that you should sell. So this stock is pretty much up in the air. Let's go down and check out the research report. Now, analysts already gone ahead and rated this 4 stars, meaning it's not very risky stock. Now, the fair value is currently sits at $71. The fair value, according to analysts, is the price that the stock should be trading at right now. However, the stock is trading at $57, which is below the current share value. Once again, from the current price of the stock to the fair value, the stock is undervalued. Now we're going to go ahead and we're going to see one last thing, and that's going to be the earnings. Earnings is still to come. Now, for those of you guys that trade options, before you get into any option strategy on any stock, always make sure to double check to see when earnings are going to be. Okay, now that we have that out of the way, let's go ahead and we're going to check the chart. The chart is very important. In order for you to open up the chart, you're going to go to the advanced feature right here, and that's going to open up the chart. We're now going to go over to the 1 year outlook, because most of the options that I do, I always go either a year or lower. Now, two things we're going to focus on, which is going to be my MA200 or my 200-day moving average. And as you guys see these three stocks, you're going to see a commonality with the chart of all three of these stocks. Now, for the 200-day moving average, which tells you this is the price the stock was trading for the last 6 months or 200 days, Novo Nordisk falls in at around $78. The current price, once again, is $57, as you can see to the top here. Once again, you could see the current share price is undervalued compared to the 200-day moving average, compared to the 52-week high, and compared to the fair value. So that's three different scenarios we see that showcases that the share price is undervalued right now. Now we're going to go ahead to the RSI, or the relative strength index, to see how that's doing. Now, the relative strength index is a momentum indicator that just gives us an idea of whether the stock is overbought or oversold. Now, the RSI of Novo is around 43, 44, which is not bad. Neutral territory on the RSI is going to be a 50 RSI, with anything going upwards of 50 towards the 70 RSI tells you that that stock is going to be overbought, and vice versa. When you go below the 50 mark, anything moving closer to the 30 RSI tells you that that stock is going to be in oversold territory. Right now, Novo Nordisk is in good territory, let's say neutral territory. Now, if you guys want me to show you what option strategies I will be using for these stocks, go ahead in the comments below and just type in options. I'm going to go ahead and show you exactly what options I'm using with these stocks. Now, before we go ahead and check out our second stock, I want to bring something to your attention. So we're going to go over to this right here. Now, in order for you guys to get this chart right here, all you need to do is go ahead and type in finviz.com, which is FINVIZ. What this does here, it gives you an information about how the market is currently doing. What you want to do is change your parameters here to the left. So this, all your green you're seeing right here, just shows you the 1-day performance. Based on your strike prices that you use for your options trading, you might want to go ahead and choose that. What I'm going to do, I'm just going to go ahead and check out the 3 months performance for the entire S&P 500. And once again, the entire thing is green. Now, for the past couple of weeks, the past couple of months, you guys have seen most of the stocks have been falling, but that is just a narrow outlook of the overall market. If you were to go and use these parameters right here, you're going to get a more macro look, and that helps you determine whether the bulls are in charge or whether the bears are in charge, or whether we're in a bull market or a bear market. Now, lastly, let's go ahead. We're just going to do the 6-month chart. The rest you guys could pretty much do by yourself. So let's go for the 6-month chart. And as you can see, once again, there is more green than there is red. Now, let's go ahead and get back to Robinhood. And what we're going to do now, we're going to showcase the second stock, which I moved up on my watch list and have it as high priority. And that stock is going to be Trade Desk, or the TTD. Now, let's go ahead and check out Trade Desk. So here we are on Trade Desk, and the market is just waking up right now. So let's go ahead to the 1-week mark. Okay, with Trade Desk, let's go ahead and see how that's doing. So the 52-week low is at $42.96, whereas the current price of Trade Desk sits at $53.48. So Trade Desk and Novo Nordisk are trading in the $50 range. So the 52-week high is at $141.53. So for our first metric, you can see that this share price is undervalued. The reason for that is you can see the current price of $53 is way closer to the 52-week low than it is to the 52-week high. So metric 1, this stock is undervalued. We're going to go ahead and go down just a bit more, and we're going to check out the trading trends. Now, Robinhood investors are not really buying this right now. And if you go over to hedge funds, the hedge funds are buying this, but don't take this information at face value, because the hedge funds have to absolutely buy Trade Desk. It was recently added to the S&P 500, so they have to buy this in order to balance off their portfolio. So this is not very accurate to be used. Let's go to insiders. And you can see insiders have started to buy up the stock, so that's a good sign. Insiders buying is a very good sign because they have more information than people like us that are looking from the outside in. Okay, let's go down once again and let's see the analyst ratings. So as opposed to the first stock, Trade Desk has a 60% buy on it. So analysts are very bullish on the stock, whereas there's only a 30% hold and only a 10% that says sell. Once again, it has a 4-star rating, meaning that this stock is not very risky. This stock is in the S&P 500, so all those analysts, all those hedge funds, those guys have done their own research, and these guys decided this is a quality stock and it could be added to the S&P 500, which showcases the best 500 American stocks. Now we're going to go down one more and we're going to check out the fair value. The fair value is at $82 compared to the share price of $53. So once again, our second metric tells us that the share price is undervalued because it's trading way lower than what they estimate the fair value to be. One last thing we're going to do, we're going to go ahead and check out the earnings. So once again, earnings are still to be expected, and that's going to be November 6th. The reason why I always want to showcase earnings is because you need to pay attention to earnings, because if you do an option strategy close to earnings, that might give you a bad result or a good result, and it's pretty much gambling because we don't know what lies in the earnings. Now let's go ahead and we're going to check out the charts, and right after this I'm going to give you guys some additional information that's going to help you with your options trading. So once again, we're going to go ahead and open up the advanced feature, and we're going to go over to the 1 year outlook to see how Trade Desk is doing. Now, I'm not sure if you guys already seen the commonality between this chart pattern and the previous one. Once again, the 200-day moving average is way above the current share price. Whenever I'm getting into options, I'm getting into stocks, this is one of the main things I look for. I always like to feel like I'm getting some kind of value. Now, the 200-day moving average is about $86, and the share price is at $53. So once again, our third metric tells us that the share price is undervalued because the current share price is below what the share price has been trading at for the last 200 days or 6 months. Now let's go ahead and check out the RSI. The RSI is around 37, so that tells you this stock is way oversold. So with the Trade Desk, we now have 4 different metrics that tells us that this share price is definitely undervalued. Hence, I moved it to the top of my watch list. I'm going to be getting into options and invested on this stock. Once again, if you guys want me to show you exactly what option strategies I'm going to be using for this stock, go ahead in the comments and just type in options. Now, speaking about options, let's go ahead. We're going to open up a Google page. And what you guys want to do, you want to type in any stock you want to be using. Just type that in and then just type in expected move. What that's going to do is that's going to open up this here, and you could pretty much choose the first one, which is barchart.com. What I'm going to do, I'm going to show you how to use this in order to make a more informed decision whenever you're going to be getting into options. Now, like I said, feel free to use this on any stock. I'm just using this on SPY right now. And then let's go ahead. Once it's loaded, I'm going to go ahead and show you how to read this chart. So here we go. It's pretty much loaded. We're going to scroll down just a bit. And that's the information I want to show you. So what this represents, this shows you the expected move of a stock at any particular date, and this matches up with the option days as well. So let's use August 28th, and we're gonna go ahead to here. From making of this video, August 28th is gonna give you 5 days to expiration. The DTE just means days to expiration. So the August 20th, 5 days to expiration. The current price of the stock is 645.31. Now, the expected move is going to be $5.74. Now, that represents an 89%, a 0.89% move. Most of the time, the majority of the time, the Spider ETF always move less than 1% on both up and downside. So you could use that information in order to make a decision on what stock prices you're going to choose to do your options. Now, the upper price move that they're looking at is going to be 651. Now, I'm going to tell you this is going to be hard to maintain and get to because this is going to be an all-time high. SPY has never hit this before. So that's the upper price move. So when you doing your options, depends on whether you're bullish on the share price, you could go ahead and use this as a basis. Now, on the lower end of the spectrum, what they're saying is that the share price could reduce as much as $639. So those of you that are bearish, go ahead and use this as your basis. Now, the implied volatility. The implied volatility for the Spider ETF is usually always around 10%, which is not much. Just as a reference, when using implied volatility on different stocks, any implied volatility between 1% and 50% shows you very low risk. Any volatility from 50% to 100% is like medium risk, and that's where you want to be if you're doing options. Now, any volatility of 100% and above can still be traded, but then you're going into very risky territory, and those with 100% above volatility pays you way more options premium. Now let's go ahead. We're going to get back to the third stock that I moved up on my watch list in order for me to go ahead and use it to grow my portfolio exponentially. And that is none other than United Health, which is going to be UNH. So let's go ahead and open that up. Let's go to the 1 week chart since the market is just waking up right now. Okay, so here we are on UNH, and the current share price of UNH is around $308. However, the 52-week low was $234.60. Now, the 52-week high was $630. The current share price is $308. So the $308 is way closer to the 52-week low than it is to the 52-week high. So our first metric tells us right off the bat that this stock is definitely undervalued. Now, a bonus for this stock is that it pays a very decent dividend of 2.7%. 2.7% is a really, really good dividend, especially for a stock of this caliber. Let's go ahead and check out our second matrix. And for that, we're going to see what the analyst is saying about this stock. Now, the Robinhood investors, as you can see here, they actually are selling this stock. Not sure why. Let's go ahead to hedge funds. And hedge funds are absolutely buying this. Once again, this information here cannot be taken as face value. The reason why you have this big rise up right here is because Warren Buffett and a few other hedge funds decided to go ahead and buy UNH at the current price because they think they're getting a very good value. So this is just a few people that's buying it right now. Now let's go ahead to the insiders. And the insiders hasn't started to do anything quite yet. So we're going to go down once again and we're going to see the analyst ratings. Now, 71% of the analysts are saying this is definitely a very strong buy, with only 17%, let's say 18% saying hold and 10% saying sell. So analysts are very bullish on the stock. Once again, this third stock I'm bringing to your attention has gotten a 4-star review. Remember, the 4-star review just tells you that this stock is not very high risk. Now, the fair value of the stock is $400, whereas remember the current share price is sitting at $308. The move from the $300 to the $400 still tells you that there's a lot more upside than there is downside, and that's going to represent around 30% if it does go back to $400. Remember, the average price is $630 for the last 6 months. So even if you're looking for the stock to go back just to the fair value, you're still going to be able to lock in some serious gains. Now let's go ahead. I think they did. Okay, so earnings is going to be October 14th. And this is one earnings you definitely want to pay attention to because these guys changed CEO. These guys also changed CFO. One of the first things that these people do whenever they get into that position is that they reduce guidance. When you reduce guidance, the result is very easy to beat expectations. So just keep an eye on that. All right, let's go ahead. We're going to go back and we're going to check out the chart now. And then I'm going to show you something very familiar that you should know. So let's go to the advanced feature right here. And let's go to the 1-year chart once again. Now, as you can see, the chart looks exactly like Novo Nordisk's chart. It looks exactly like TTD chart, where the share price is trading way below your 200-day moving average. So the 200-day moving average is 437, which is a bit above what the fair value is, but yet still it's way above what the current share price that is trading at, as you can see to the top left, 308. So now you could take a look at any matrix that you want while you're doing your own due diligence, and that's going to tell you all 3 of these stocks are underpriced. Now, the fact that the stocks are underpriced, even if the market were to get a pullback and these stocks were to go down even more, then that would present a very big opportunity for them to go ahead and just go in with these stocks. I mean, I'd be going in hard on these stocks in options or investing if the share prices decide to go any lower. Whenever you go ahead and do your own due diligence on these stocks and you have high convictions of the stocks, whatever the short-term move of the market is should not affect you. Always stay with your long-term goals and you will see success. Remember, the one way to learn options is always to practice, practice, practice. Once again, if you guys want me to show you the exact option strategies I'm going to be using with United Health, then just put options in the description below. So there you have it, investors and future investors. These are 3 stocks I moved up on my watch list and I've labeled them very urgent. The reason I've labeled them very urgent is because I want to get into option strategies and also investing on these stocks. And the main reason for that is because all 3 of these stocks are undervalued. and undervalued stocks in good companies give you a very good opportunity in order for you to grow your account portfolio exponentially. So, those of you that have made it to the end of the video, you guys are the real investors and future investors. If you haven't already, now would be the perfect opportunity for you to go ahead, like the video, subscribe to the channel. If you guys need any help with options, I'll be more than happy to help you. Go ahead and check out the link in the description below. Now, most importantly, if you know anyone struggling to grow a small account portfolio and you think this video could help them out, then go ahead and share this video with them. Together, let's try to help as many people as we can start to make income with options trading in order for them to make some extra additional income in order to supplement their regular 9 to 5. Now, until the next video, keep pushing your investments.